You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. Unlike some guys, tastytrade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, tastytrade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named tastytrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means it is Wednesday. Yes, it is Education Wednesday. Time once again for what the cool kids call OBC. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks are mainlining these days. Hope you're having a great kickoff to your trading year. January now in the books. Hope you're having a good trading year out there. Listen, remember, if you want to play along, join the party over there on the Pro. In fact, I think it's time. Couldn't do it on the Monday option block, but it's time to give away the January Pro Trading Crate out there, listeners. Remember, if you want to get your name in the hat for the February Pro Trading Crate, as well as everything else that we do over there. And welcome to all the new folks. I'm remiss in welcoming all you folks. Welcome to all the new folks who've joined over the last month in January there. Only one place to do it, theoptionsinsider.com/pro is the place to go. As we go to the Southern Options Mecca known as Frankfurt, where we are joined once again by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call to Mr. P, welcome back to Options Boot Camp, sir. How are things in Frankfurt?
Things are fantastic in Frankfurt, my man. Doing great. And just watching the market, talking to traders, doing my thing, man.
That is kind of your thing. Well, you know what, Dan? I'm going to expand your thing. I'm going to give you the ultimate power now. The power is yours. As He-Man would say, you have the power, Mr. Dan. I have fired up the random number generator, sir. So right now, all of our pro members are listening with bated breath. Will you call their number, sir? The floor is yours. The number generator is running. We could do it now if you want to let the people dangle for a bit. I know you're that's why we call you the black-hatted one. You like to do that sometimes. So the choice is yours. Oh, bam. All right.
I didn't see that one coming, did you?
Luckily, reflexes like a cat. I had my finger on the button, ready to go. Oh, this is a low number. You picked an early member here, Mr. Dan. Let's see. Who does that correspond to? Oh, this is our good buddy Alan. Alan's one of our longtime members. One of the OGs. Ooh, a box heading your way, Mr. Allen. Congrats to you. Thanks to you for being a long-time member. All you long-timers. We love you all out there, but you folks who were there from day one. Always a special breed to us. Happy to send a box your way, Mr. Allen. Our producers will be in touch. They already have your details, but they'll want to get, your selections for your bespoke pro trading crate. Remember, the pro, the only place to go to get access to that fun stuff, listeners. Get your name in the hat for February. You want to join Alan and the rest of the crew. TheOptionsInsider.com/pro is the place to go as we keep on going into a little bit of the old options drills.
Colin Bunch. Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
Gotta love that music. Even in the depths of frigid winter, listeners, it feels like 4th of July or Flag Day or some other summer event here on the show. As we dive on into a little bit of options drills, today's topic actually inspired by this question from Enzo02. So either he was born in 02 or really loves that year, or he's the second Enzo online. Either way, Enzo02 wants to know, where did we go out for 2024 in, quote, da biz? Da biz. I'm going to start calling that. I assume by da biz, Mr. Enzo02, you mean the options biz. That is what we talk about here week after week here on the show. So I'm going to assume that. If you meant some other biz, construction, Hollywood, kind of came to the wrong show. But so we'll get out into the world of options. We've been tracking all year last year, right? We were saying, hey, on track for a banger year. Will it go out that way? And we haven't really had a chance to crunch the numbers for December or for the year. So we shall do that now. December came in hot, listeners. A banger month. December, normally, kind of a sleepy month, listeners, for obvious reasons. It's the holidays. Everyone's away from their desks. Not a lot of volume going up out there. And yet this December, and indeed the year, going out like a lion. Total volume in December up 20.3% from December of 2023. We were at 916 million in 2023 in December. This past December, 1.1 billion. Yes, billion with a B, listeners. So a banger month. And interestingly enough, the lion's share of that growth, 29.5%, coming in single name equity options. That's kind of fascinating to me. I'll get to the reason why in a second. ETF options up 11.5%. Index options up 6.1%. Again, total options volume up 20.3%. Let's even throw futures in there, mostly VIX futures. There's a smattering of other things being cleared by OCC on the futures front now, but it's mostly VIX futures still. And they had a banger month as well, 11.3% to the upside. Mr. Dan, are you surprised that December coming out of the gate and going away hot, sir, for the end of the year? Not usually the seasonally sleepy period we expect, sir.
Yeah, you know what? That really is a little bit strange, Mark. I wonder. I'm not. Why is that? Well, election year, maybe? I don't know.
Well, the markets did kick off in December. You're right. Still feeling that post-election optimism. They were still rallying, and there were some market action in December where there usually is not. So you can maybe read into that what you will, listeners. So we had a banger December, and that means we have the numbers now for the year, listeners. And was 2024 a banger year, or how did he put it, Enzo02? In da biz? How was the year in da biz? That was the question everyone was asking all year long. Could we possibly keep this tsunami, this freight train of exponential growth in the options market on the tracks throughout the entire year of 2024, or would something derail it? And the answer was yes, you could keep it on the tracks. No, something could not derail it, listeners, because 2023 was a banger year, 11.1 billion contracts, and 2024 said, hold my beer, kid, almost 12.28 billion contracts. That is an increase of 10.6%, listeners. A couple of highlight areas here. VIX futures, we're just talking about those. They're up 7.7% for the year, so a pretty decent year, all things considered. I mean, 7.7%, not explosive, but also it's not zero or negative like it has been last couple of years out there in VIX futures land, where VIX futures were kind of languishing. So interesting to see VIX futures getting a little bit of an uptick there. Index options, the place that was really the mecca for growth for the options market for the last couple of years, certainly post-April of 2022. What happened then, listeners? Go check your history books if you don't remember. But ever since then, it seems like index options have taken the bit in their teeth and led the overall volume train higher. This past year, they were pretty robust, 8.9%, but actually not in the vanguard, not leading the race in terms of growth. ETF options actually comparatively sluggish, 4.1%. growth there. The big dog, I kind of gave it away when I talked about December, listeners. The big dog for the year, equity options up 16.1% on the year, 5.6 billion contracts in 2023, 6.5 billion in 2024, which is a good sign because last year, in fact, we were talking about this when I did the stack panel at the beginning of the year last year, myself and the Flow Master and JJ from Tasty over there in IG group. And the question was, man, single name options, they were flat pretty much on the year. Has the retail boom, has that gone away? The mom and pop slinging their 10 lots in whatever, Tesla, Nvidia, pick your meme stock of choice out there. As that volume, has it dried up? And the question was a big one last year. Coming into this year, could we sustain it? And lo and behold, whether it was the meme stock boom earlier this year, whatever it was, Dan, the retail folks, the single name folks, they are back to play in spades. Not that they're not playing in the other categories, but they're definitely playing in the equity options category, up 16.1%. So, Dan, I know you particularly were concerned about this. You spent some sleepless nights tossing and turning last year, saying, man, are the single name equity options retail folks, are they going to come back? Well, I got news for you, Dan. They're back.
All right. Well, that's good news, isn't it? I mean, I would speculate that a lot of the increase in ETF volume is the zero DTE stuff, right?
ETF as well, yeah, and definitely index, of course.
Yeah. So, yeah, I mean, I guess it's interesting that the equity options came back in a stronger way than ETFs and index options. It's actually a little surprising. Yeah, I don't know what to think about it. I guess I'm more interested to see what the trend continues to be. And I mean, the zero DT stuff has been so very, very popular. It doesn't seem like it was just a fad. And I'm not saying that this necessarily implies it, although if this trend continued, I think you might start making that inference.
Well, Dan, funny you should ask that about the trend, because just this morning we got in our hot little hands from our friends over there at OCC the numbers for January, Dan. So we can see now if the trend is continuing or not. Let's go look, shall we? For you and for Enzo02 and everybody else who's wondering, is this just kind of, as Dan put it, a fad, a trend, or is there more to it? And the numbers for January, listeners, again, January, not normally a banger, but I did say at the end of last year, keep an eye on January. The last couple of years, it's come roaring out of the gate. Obviously, everyone goes immediately to 2020 and the onset of COVID. But before that, as you'll recall, we did assassinate an Iranian general in the Middle East. So that sent off a bit of a dust up, vol spiking, everything else. We saw equivalent, not quite, madness, but a lot of weird, wild whipsaws in the market this past year. Of course, DeepSeek spooking everybody in the AI space. So a lot of things popping off in January, Dan. And all of that translated into a banger start to the year. So if you were fading options volume this year, listeners, you are off to a bad start. Overall options volume in January, Dan, up nearly 18% from, again, an already record 2024. Now we're off to the races yet again. January 2024, 984 million. This January, 1.1. That's that kind of magic number, 1.1 billion. That's the new magic number out there. Again, just a few years ago, listeners, pre-COVID, the whole industry was doing 3.5, 4.5 billion contracts. So 1.1 billion in a single month. This is kind of just new era, new air, unexplored territory for the entirety of the world of options. Again, up 17.8%. Index options. Now, Dan, maybe this gets back to what you were saying. People were worried that the zero DTE was overtaking the entire options world. Maybe going back to your point, maybe about not quite a fad, but maybe a trend. Index options were strong, but again, only up 5.1%. They were one of the lighter growth categories. ETF options up 8.3%. And the banger once again, Dan, equity options up 27.6%. In fact, the lone dark spot was actually futures. I just spent some time praising VIX futures. I have to take it all back, listeners. They lost 8.6% in volume in January. So kind of a wild month. Futures down, index options growing, Dan, but single name equities once again leading the charge, up 27.6%. Sir, what are your thoughts?
Wow. Well, yeah. I mean, that goes to what we're talking about. Any one data point, as any trader knows, any one data point doesn't mean anything. But when you start seeing them strung out in a series, that means something's changing. Well, actually, no. I mean, you know what? Here's kind of the more obvious answer. Actually, here, I just want to check a chart here. Wait. No. Yeah, so the CBOE DSPX, which is their dispersion index, which I don't know a ton about, but it measures the dispersion, and that really climbed throughout all of December and all of January. And in fact, really peaked at, what is this date? The end of January. And that makes so much sense, right? Because with the tariffs, like, it doesn't affect every product the same, especially when other countries like China retaliate and put more tariffs on coal and liquefied natural gas or whatever than other things. There's going to be a lot of trading within individual names as opposed to the market itself, getting out of the ones that are being punished more by tariffs and getting into the ones that are less punished by tariffs. I don't know. I mean, I'm like just having this thought now. I don't know. Maybe I have a logic flaw in there. It's not super well thought out, but that kind of makes sense in hindsight.
Look at you quoting the new SIBO dispersion index. They said a couple of years ago that they were going to, about a year and a half ago maybe, they're going to make it a tradable product. Hasn't happened yet, Dan. I think they kind of maybe got a little bit ahead of their skis on that one, making a tradable dispersion product. Not quite as simple as maybe they initially assumed. But that is an index you could watch right now. It is DSPX, listeners. Again, you got to get into the weeds a little bit about the nomenclature and what that actually means. But hopefully there will be a tradable product coming sometime in the near future, in which case maybe could be fun to devote some shows here to dispersion. Speaking of fun, listeners, we always have fun when we get to you folks. Time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Let's get to the mail call. First off, let's pay off really quickly our question of the week. Well, we actually had a two-parter last week, which was very contentious. We asked you folks, last week. Hey, this whole DeepSeek thing, is it the canary in the coal mine for the end of the AI boom? We had a two-parter. Quite simply, will the S&P 500 close positive on the year? Yes, no, or I'm too busy slinging vol or crypto. And then more directly, do you think NVIDIA will close positive on the year? And our audience, Dan, kind of getting a little funky. Nearly half, 46%, saying the S&P will close negative on the year, which is kind of interesting. 32% saying it will close positive. 18% say they don't care, they're too busy slinging vol. 4% say they're too busy slinging crypto. And then we have the other part of that. Will NVIDIA close positive on the year? And they were very overwhelming in their selection, Dan. 70% choosing heck yes, NVIDIA is going to close positive on the year. Hell no, 30%. So Dan, kind of a weird scenario. The S&P is going to sell off, but NVIDIA is going to shake off the impact of DeepSeek and rally on the year, sir. What are your thoughts?
Yeah, that seems to be a little cognitive dissonance right there. To me, I don't see it playing out in that regard. I could see them both being up. I could see them both being down, but one way, one the other way. I don't know. I have a tough question about that. Especially because they said that NVIDIA would be up and the S&P down, right?
That's exactly what they said, sir.
Yeah. So, if there was a divergence between the two, I would personally see it the other way. Just because NVIDIA, it's not like, hold on. Yeah. It's not like they're just massively overpriced or anything like that. But a bit from a PE ratio and forward PE ratio standpoint. But geez, I don't know. Yeah. If there was a divergence, I would see it the other way. S&P up and NVIDIA down.
It is a strange divergence, listeners. I'd ask you what you thought, but you already weighed in. So kind of interesting. Who am I to second guess our audience, Dan? But interesting results. Speaking of interesting results, we have a question going on right now, Dan, that is very much near and dear to what you were just talking about, the thing that is kind of roiling the markets and indeed the globe right now, the tariffs and the prospect of escalating trade wars. So we asked you folks this week, tariffs, the threat of escalating trade wars are roiling the markets this week. Is this a tempest in a teapot, or do you think we'll be dealing with this fallout for some time? Quite simply, how long do you foresee the tariffs impacting the market and volatility? We gave you 4 choices. Tempest in the teapot, so it'll be gone pretty soon. Or short term, let's say through the end of Q1, or maybe a little longer, maybe more midterm range, let's say through the end of Q2. Or you think it's got some legs, Dan, through Q3 and perhaps beyond, to infinity and beyond. Dan, where do you fall on the extent of the impact of the tariffs? And B, where do you think our audience is lining up right now?
I think for sure through Q1, possibly through Q2. But I kind of feel like, I kind of think that once like the first stone was cast, people got a glimpse of like what this is all about. And I think the biggest bit of volatility reaction happened, and all the other ones will be muted because the players in the market have some psychological experience now with that scenario.
Let's see what our audience is saying. Again, you can vote for this. If you're listening to this week, listeners, you can vote right now over there at Options on Twitter to make your voice heard. If you're voting, or I should say if you're listening down the road, as we know many of you are, weeks, months, years down the road, you should still head over to @Options on Twitter anyway. Chances are there's another awesome question of the week waiting for you right now. But right now, Dan, 30%. So the number one, not by much, but the number one selection of our audience right now, Dan, is that this is a tempest in a teapot. I think this is going to blow over, which is kind of interesting. Then we have a tie for second, both around 25% for short-term through Q1 and through Q3 and beyond. So that's kind of interesting. And then bringing up the rear, Dan, with 20% is midterm, so through Q2. So I think you can see right now, Dan, our audience is almost evenly split. They can't make up their mind on how long this is going to last, which I suppose is what makes a market, Dan.
Yeah, and it's one of those where whenever an issue comes up that is rooted in politics, I always try and help our traders to, I try and remind them to separate emotion and policies you care about, or, people you hero worship or hate with a passion. Separate that from what happens economically and psychologically in the market. And so, I don't know. I wonder if that's why we got a lot of tempest in the teapot and Q3 and beyond, because those are the more extreme versions here. And I don't know. I don't know. It's searching for antecedents is always just like solving a fun puzzle.
Look at you throwing out dispersion, antecedents today. Did you break out the old thesaurus?
I don't know. I'm taking my smart pills.
I say, did you take your brain food this morning? Have a little fish in your breakfast? All right, let's see what our audience. In addition to voting, people are chiming in. We got one of our pro members, Age Delaquarius, says, I include grains in my definition of the markets. So that's why I think this will be ongoing way past Q3. Yeah, if you broaden your purview to beyond just equities to include things like commodities or energy or other things, ripples and reverberations of this could be pretty long lasting. The option premium chimed in to say, tariffs often create short-term volatility spikes, but lasting impact depends on economic ripple effects. For options traders, watch for elevated implied volatility in affected sectors. Short-term, great for premium selling strategies. Long-term, adjust your delta exposure as macro trends unfold. Well, his name is the options premium, so I'm guessing he likes to harvest a little bit of the old premium. And our resident humorist, Mr. Griffin, says, hard to say, but probably about as long as it takes me to assemble IKEA furniture. Somewhere between a couple of weeks and a few months, Dan. That's his gauge. I kind of like that. I'm gonna start using that for my market impact. The IKEA furniture gauge. Because you know what happens? You start building one of those things, and something distracts you, or they don't send you all the parts, or the tools suck, and so you leave it in a pile for months, right? I think he's right. Then you come back, oh yeah, I got to finish building whatever, that shelf, that bookcase. And then you put it together, and then at least that's my experience, and it sounds like that's been Vernon's as well. So there you go. It's the IKEA bookcase gauge, Dan. Somewhere between a few weeks and a few months. I like that. All right, let's keep rolling. While you send in questions, but of course, if you take the time to join us in the live on the Pro, we always bump you folks to the top of the list because you're making that extra effort. It should be rewarded at the end of the day. Today we got a timely question coming from Nichols, Mr. Dan. Nichols wants to know, what do you guys think of the big Google miss last night? Is the worm turning on firms throwing billions into AI with no return? Yeah, we are recording this, listeners, in the teeth of earnings season, and one of the big bellwethers in AI, Google, aka Alphabet, kind of screwing the pooch last night. As we're recording this, listeners, they're at about exactly $190, off about $16.50 or about 8%. So not exactly a great day for good old Alphabet. A lot of that on they missed revenue for the fourth quarter. And also, as Nichols points out, very high capital expenditure plans. And take a guess what that capital expenditure is going towards. Oh yeah, AI. The company plans to spend $75 billion on capital expenditures to build out its AI offerings and race against mega cap rivals to build out data centers and new infrastructure. Also, probably more alarming to the Alphabet crew, their core business, the YouTube advertising business, and indeed the search business, which is their bread and butter, that powers everything else, they all slowed year over year. So maybe that's why they're spending so aggressively. They're kind of like the Saudis. They know this monopoly won't last forever, so you got to invest in the new thing while you have the capital. Maybe that's some of it. But Dan, I don't know. It's kind of fascinating. Wasn't it just a week and change, this whole DeepSeek thing came out? I know people are looking askance now at that 6 million number they threw around. But still, the whole narrative coming out of that was, hey, maybe AI can be done cheaper. Maybe it can be done more efficiently. And then in the last week, first we have Meta saying we're going to spend like $100 billion on AI in the next few years. And then Google says, yeah, us too, $75 billion. So I guess, Dan, the narrative is the hell with cheaper, more efficient AI, Dan. It's full speed ahead. All cash goes to AI, sir.
Well, yeah, I mean, I don't know. As far as cheaper AI goes, like, I think there's something to that. Because you see this all the time with any sort of product or commodity or anything. Like with Bitcoin, with crypto, I guess I should say in general, like at some point people realize, holy crap, we're burning a lot of coal to create electricity to mine these things. And then they figured out better ways to do it. And it uses less energy. And speaking of energy, like anytime there's been a changeover in energy, you always use more of the last energy. Like basically, it becomes more efficient over time, and everything becomes more efficient over time. So, yeah, I mean, DeepSeek was just this sort of seemingly black swan event to most people because it wasn't like they cut the chip uses by 5% or something like that. Like they massively cut it. So, I mean, that's kind of a big thing, but I don't know. Maybe we talked about this on the last show. I talked about this with somebody lately. I don't think DeepSeek really affects its competitors in the US that are also creating AI products. But for sure, it has impact on chip makers, AI chip makers like NVIDIA.
Yeah, it's a fascinating one. Who asked that, Nichols? It's a good question. Obviously, for a lot of traders in our audience who want to just sling and need vol, this is great for them. Drives vol, drives some price action, which is what earnings season is all about out there. But longer term, I think it does raise some interesting questions. For the longest time, you just came out and said, hey, we're going to dump it all into AI. I say the longest time. Usually the last couple of years. The last couple of years, you just whispered those two magic letters, AI, and bam, your stock was up, usually 15, 20% as a result. So now they're saying those magic letters and the stock's still getting hit. So maybe some folks do want to see some eventual returns on this, which sounds like heresy to say. You want to, especially we have names like Palantir popping 22%, and their PE was already, I think, 450 before that. I don't even want to know where it is. All right, now let's see. 535 is the PE for Palantir at 101 right now, giving off about $3. Don't get me started. When you start talking the magic letters of AI, the other former magical letters like PE don't seem to mean as much, which is kind of fascinating to me. Speaking of fascinating, you folks all kinds of fascinating questions. Let's go to. This is kind of an interesting one, Dan. Let's do, he says it's a left field question, and it kind of is, but kind of not. I've been kind of mulling this myself, actually. This comes from Takes Two, and Takes Two wants to know, maybe a little left field, but I've been wondering lately, do you think the average age of the options trader has decreased since COVID? That's a great question, Takes Two. I need to talk to some of the folks that might have some demographic numbers, some hard demographic numbers. Obviously, the brokers would have those. OCC, I'm not sure how much demographic numbers OCC might have. They don't get them, obviously, straight from the business. They'd have to do some external surveys and things. But I would definitely say anecdotally from my own experience, I've been doing this for a while now. Like we said, a few weeks ago was our 18-year anniversary of launching the Options Insider. So we've watched a few waves of new traders come into the market. And when we launched this whole thing, listeners, one of the reasons we started experimenting with this brand new medium known as podcasting back then, remember, pre-iPhone, had to have an RSS reader to get it. Nobody was talking finance, let alone options on these things. It seemed like a wild thing to do. The main reason we did that is because I thought, well, I know if I start talking about options on a website or an email or anything else, I know I can get that, let's say, slightly graying demographic. 55, 60 years old, at least $500,000 in the bank. I knew I can get that audience. That was, for the longest time, the core demo of the options market. And it still is, to a great degree, don't get me wrong. At the end of the day, they have the most capital. But the attempt, the whole podcasting initiative that we kicked off here was really an attempt to do just that, to try to get a younger audience interested in options. And that was kind of our whole goal. That's why we got on Twitter as early as we did. Everyone asked us, hey, how'd you get at options? We were just kind of early on that front. So all of this has been kind of an endeavor to do this, which, as you asked, kind of seems to be happening now post-COVID. We see, kids out there on forums, Reddits and others, debating options. The term options is not a scary word anymore. It's not immediately associated with negative things like risk. It's seen as another tool. Now, the other side of that, some people might think they're a little bit too flip with them. Maybe they think the access has gotten too easy, too cheap, and now they're viewed more as gambling. And that's a big debate around zero DTE, and I'm certainly willing to have that conversation. But in general, there does seem like there is much more awareness of, and dare I say it, acceptance of options at a much younger demographic than there were even a few years ago. Dan, I'm curious from your perspective for take two. An interesting question, not one we've really debated on the show before. What do you think about has the average age of the options trader decreased post-COVID?
These are always hard questions because, I mean, part of it is, did the people who are now trading options get younger, or did I just get older? Maybe it's a relative thing.
I got bad news for you, Dan. You're getting decrepitly old. Yes, I hate to.
Yeah. I talked with a good friend of mine from the OIC who mentioned that they don't really keep a lot of that kind of demographic data. They used to do a survey, but I think they only did it like once every decade, the Harris survey, but I don't think they've done it for a while now. It would be interesting to know. I mean, the meme thing in Robinhood also, they had a pretty big impact on younger folks. But then when Options Express started in the early 2000s, or was it 2000, who were the entrants there? When Zecco started, who were the entrants there?
Our old pal Zecco on the early episodes of this show. Yes.
Yeah. I still have some swag. I was going through my, like cocktail accessory drawer, and I found like a wine bottle opener from Zecco.
Hold on to it. Probably worth some money. See, I'm an idiot. I give all that kind of cool, rare stuff away to our listeners. But you could hold on to it and probably make some money off it.
I'm pretty sure it's a pretty small market creating the demand for that.
But they have cash, as we're debating right now, so they're willing to pay.
Yeah, but if they signed up for Zecco, they don't like paying for things.
Well, now the whole industry is Zecco, right? So
yeah, exactly. Right.
What does that tell us about where the way the options industry is going? But you're right. The Robinhood thing has kind of expanded the access as well. Access has definitely expanded. I know in the COVID days, everyone was stuck at home. Trading was the one thing everyone could do. The advent of zero DTE options certainly made these products more accessible from a cost and size perspective and duration perspective. You have no overnight risk now. The flip side of that, Dan, is most of these people, like you said, a lot of these new entrants, the younger ones, they see options solely through the lens of delta, right? They're just using it to spec on some crazy underlying for a short period of time. So there's a debate to be had about educating those folks and saying, okay, maybe you can get into some higher probability, a little bit longer term type stuff. But still, that's a good debate to have at the end of the day. I think it was our buddy JJ on the network a few years ago, Dan. So probably right after. I'm going to attribute it to him, even if it wasn't, because I've said it many times since. I borrowed it heavily. I think he was around 2022 or so when he said, we wanted new people to come to the options market. We didn't know they were all going to come at once, Dan. That's pretty much what we got. post-COVID. As you know, these numbers we just broke down today, they reveal that. The folks didn't just come, they are staying and they're bringing their friends, Dan. So it's a good problem to have. We're not mad about it here, but I think there is some analysis to be done. Who asked that question? Takes two, about the overall demo of the options market. What do you think, listeners? Maybe that'd be a fun question of the week for our audience to decide, Dan. Is the overall options demo getting younger? That might be an interesting thing. I don't know. Mr. Dan, unfortunately, that music means we've come to the end of our Ponder. Man, a wild show today, all over the place. We talked about tariffs. We talked about volume. We talked about the demos of the options market. We talked about DeepSeek and AI and Alphabet. Wild show, Dan. Well, fun one, though. Did you have fun?
Yeah, man. I love, I kind of like shows like this where we have like a whole bunch of different issues. I mean, I like the ones where we can drill down on one too, but I don't know.
Oh, I forgot we even gave away a Pro Trading Crate to Alan. We did a lot of living in like 45 minutes, Dan. Wow. We're like the Army. We do more before 9 a.m. than most people do all day, right, sir?
Right.
All right, Dan, if they want to join the MTM Army, where should they go? What should they do?
Sure. Swing on by to markettaker.com. 2 T's in a row, and you can contact me there. You can get some free courses, and but yeah, make your way on over.
Make your way on over, and while you're checking stuff out, make sure you check out our friends over there at Tasty Trade. They are the reason, of course, that you're getting this show in your hot little hands. I'd have to get a few more of their cohort back on the show. It's always fun to talk about all their wild trades, the jade lizards, and all the other cool stuff that they're always talking about over there. Check them out over there at Tasty Trade. Tell them we sent you. They'll be happy to hear from you. That's going to do it for us. A bit of a shorter broadcast day here on the network. A lot of stuff going on behind the scenes, listeners. So unfortunately, no futures rundown coming at you today. We'll be back tomorrow, though, with our usual doubleheader of the option block. Our buddy the Flowmaster promises me, he tells me he's going to do his homework this week. He is going to have his own option block unusual activity year in review. Trust me, you want to hear the Flowmaster's unusual activity year in review. He's got the data. I always may talk to him about the demos as well. I'm not sure if he'd have that, but it'd probably be an interesting question for him as well. And then, of course, This Week in Futures options. After that, Friday, we're back again with talking a little bit of vol with volatility views. Then back again for you folks on the pro side with a whole bunch of options oddities. Congratulations to Alan winning the January Pro Trading Crate. If you want to join him, you want to get in on the action, you want to ask questions during the live, you want to go check out oddities, you want to go check out our pro Q&As and a whole bunch more, theoptionsinsider.com/pro is the place to go to join the party. And then we're off for the weekend until we're back again next week, all the way through to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options,
facebook.com/theoptionsinsider or via questions@theoptionsinsider.com.